Expert Rant, a podcast where we invite professionals to share their real world insights and stories with us. I am Maneesha Wali, your host for today, and this is Dr. Anand Gonsalves. Welcome, Dr. Anand.
Thank you.
Nice to have you here with us.
Thank you.
So I'd like to introduce Dr. Anand before we start. He is a chartered accountant, a postgraduate certificate in business management from XLRI, and holds a diploma in corporate law from the Indian Law Society, Pune. He has completed courses on leadership from IIM, Calcutta, and the emerging CFO program from IIM Indore. He is currently pursuing the Advanced Professional Certificate in International Tax from the International Bureau of Fiscal Documentation, Netherlands. He is General Manager Tax in a leading construction company in India. Very impressive credentials, Dr. Anand.
Thank you.
I must say.
Thank you.
So let's begin. So I'd like to know what's your view on the evolving role of direct tax leadership in India's corporate finance function?
I think it's a very important question that you've asked. Today, compliance is no longer the most important aspect for a tax professional. What is important is strategy and strategic thought when entering into transactions. Compliance also is an important part, but it is not the most important aspect in terms of what a tax leader has to look at. Tax cost today is around 25.17% of the profit for a company that has opted for the new regime. So that is 1/4 of your profit that could go into taxes, which makes it all the more important for a tax leader to ensure that the tax cost is minimized while not taking too many risks. So this is what the role of a tax professional would be today.
Great. So how do you manage complex assessments and litigations efficiently?
So litigation is the norm in a place like India, and that is why while we enter into a transaction, right at the stage of conceptualizing a transaction, it becomes extremely important to visualize what could be the problems that could come in. And mitigating that would mean ensuring you have robust documentation in place. And if a position is going to be risky, then you have to take such positions which would be beneficial, while at the same time the risk level is not too much. How do we do that? We ensure that such positions are only based on certain decided case laws or on the basis of expert opinions where a case law may not be available. But usually we see that at the assessment level, if there's a gray area, then that is generally going to be litigated.
Yes.
So when a decided case law is there, it helps at the level of the tribunal, at the level of the High Court and Supreme Court.
Correct.
So that's how we do it.
So that calls for a lot of attention to detail, right?
Yes, attention to detail is part of our job, and it's essential to have attention to detail while not losing the big picture. So the role of a direct tax leader or a CFO is to keep his attention on both the detail as well as the bird's eye view. So if you're too stuck up with with the horse blinders on, you could miss the bigger picture. So both are essential.
So that was a fine balance. You spoke about a fine balance between attention to detail and having a vision of the larger picture.
That's right.
Yes. So can you explain about your approach to poem determination?
Yes, poem refers to place of effective management, and a lot of times we have companies which are set up outside India, which are being taxed in India because the management of that organization is taking place within India. So POEM are these rules which have been set up by the government to determine which company is being effectively managed from India and therefore should be taxed in India. Now, a lot of companies set up outside India for a lot of purposes to tap markets which are not within India. And the idea is that these profits are not necessarily taxable within India. We ensure that this happens through robust documentation. That is the kind of a buzzword in tax. And through a system of delegating the management. So management has to be delegated outside India to the foreign company's management. And this needs to be documented through IT systems, through emails, through minute protocols of the meetings. And while this is not a subject which is not free from litigation, but if we do this, one can ensure that the POEM rules would not apply.
Okay, so interesting. How do you navigate cross-border structuring to avoid double taxation?
Yes, cross-border structuring is essential for any multinational corporation. So I set up, as an entity, I'm based in India, I would have multiple subsidiaries which are outside India, or reverse, a company could be operating from the US and they would have multiple organizations all over the world. Now the idea is not to do treaty shopping, that is double tax avoidance agreement shopping, which the Supreme Court of India in one of its cases, that is Azadi Bachao Andolan, had held against that kind of thing. But it is to align your organization with the treaty benefits that you could have. So even while selecting a vendor, one could utilize those vendors which are based in certain countries which have beneficial treaty provisions. Of course, they should also be competent vendors. And you find that a lot of these companies do set up in jurisdictions like Singapore, UK, US, the Netherlands, where the treaty benefits allow for a lower tax rate. The government has also set up this system where you could have advance pricing arrangements, vet these with the government of India, and with this kind of a system you can have tax certainty. So this is how we generally navigate this space.
So what are these countries where you have lower tax?
Mauritius is one of them. You have the Netherlands, like I mentioned already, UK.
Yes.
These countries not only have lower tax rates, they could also have taxes which are aligned with the other nations. But some of the clauses in their agreements have been drafted in such a way that certain transactions are out of the ambit of tax.
Okay.
So that is why we use those kind of countries to manage the tax.
Yeah. So what's your perspective on tax risk management within global MNC structures?
Now, all over the world, you have reporting for taxes, not only to the government, but also to your stakeholders. So an investor wants to know what is going on, what is the effective rate of tax, what are the litigations which are outstanding, and what is the impact that it will have on profitability today or in the future. So what is essential is that you have this PPR analysis, which is whether the risk is remote, it's probable, or it is possible. Based on this analysis, which has to be done objectively, one can determine what is the tax cost which is likely from a litigation. This has to be tracked. We would like to do it every quarter to know what is the changing system, what is the possibility of a litigation going bad, and what is the possibility of a litigation not having an adverse implication. By doing this, you can either have the correct tax cost, or you can give a note in the financial statements which would inform all the stakeholders on what is the likelihood of something happening or not happening.
Okay. Seems very difficult and risky to do.
It's not. It's rather risk management. So it's not at all difficult, but having an objective take on what is your possible liabilities, what is a judgment call which CFOs and tax leaders are supposed to do.
Yes. Okay. So how do you handle appeals and revisions when assessments go adverse?
Like I spoke earlier, that it is essential to structure a transaction in a way that you have minimum chance of a litigation occurring. But litigation can't be ruled out. So when it happens, how do we deal with that? Always, again, I go back to having really robust documentation, and the position that you take has to be based on either decided case laws or the correct interpretation of law. Thereafter, of course, it's a matter of going, taking things further with the next appellate level. At times, you may have to file a writ, which is to the High Court directly, depending on what the implications are in that litigation. But sometimes what we find, it may be necessary to lobby with the government as well. So as an industry, together we have industry bodies which are like the CII, through which we represent to the government what are the industry pain points. And this has worked in a lot of cases where they have acknowledged that there can be problems and they have made attempts to resolve them. So this is also the way that we could go about, trying to resolve these issues.
So, how do you integrate tax, treasury, and financial reporting in decision making?
So, having the accurate numbers is very important to make the right decision. Accounting profit and tax profit are rarely aligned. So, we have the system of identifying what is the effective tax rate. Typically, your effective tax rate should align with your the tax rate of that jurisdiction or country. But whenever there are differences, those have to be reconciled. Decision making is impacted as far as your treasury is concerned with your cash flow. You have TDS, right? When the transaction is done, TDS is deducted, and that is a direct hit to your cash flow.
Yeah.
This has to be claimed as a refund in your return of income.
Correct.
How do we ensure that that happens? First of all, if it's possible, you apply for a lower deduction certificate so that you get a lower tax rate at the deduction stage itself.
Yes.
If you are eligible, of course. The second step would be to file your returns way before time. File it before time, it gets processed earlier, and if you have a refund on your return, you get that as well earlier. The third thing that you could do is ensure that you take the right tax cost in your budget. Many a times your tax cost is not budgeted properly, and that can affect the implications on your spending ability because you allocate that budget elsewhere. So having the right tax cost in your budget is also very important in decision making.
So stitch in time.
A stitch in time saves time, that's right. Yes.
Okay, great. So how do you see the future of technology in direct tax governance?
Technology is going to be very, very important. In fact, the government has been ahead of the curve in terms of implementing things like large data analysis, AI, to get insights into the way a person is paying taxes or not paying taxes. Mm-hmm. And also on compliance management. If you file an ETDS return today, you get a notice within a day. So they're that quick. And industry also needs to ensure that it is, matching the government in the steps with investment in AI, with investment in systems, whether they are ERP systems or any other system, but they have to give real-time data and catch errors that are happening in real time. So, like we see in litigation management today, you have bots which can, go onto your income tax portal, download the notice, give you an alert that there are notices, give you an alert that this is the compliance date. So these things need to be implemented so that you manage your tax cost, your litigation, and as well as your strategy through technology. So technology is not an enemy; it is a friend, and it has to be embraced.
Yes. So is it not being implemented right now?
I would say it is. Today with AI, people have woken up, but there's a long way to go because I think a lot of two things are affecting this. One is employees who think that they might lose their job on one end, and second is the cost. So if the management knows that by taking a certain expense, I can gain efficiency, then that is how they could implement technology to take their efficiency to the next level. So this needs to be done, and even employees, it's the kind of role that this is done, that this AI does or technology does, is only going to make their work easier. It doesn't mean that people are going to lose their jobs through such implementation.
Of course, that is a scare in every field right now.
So if technology is utilized well, it's going to benefit everyone, including the employees and the management. Yes.
Yeah. Now, what defines leadership in a finance function today?
Today, I think it's essential for a finance leader, a CFO, to be able to preempt problems and to be ready to make changes. One shouldn't go with what has always been done. The idea is to change things. Like I said, we also lobby with government. We try to change the law or the lacunas in law to ensure that things are better for the industry. So looking beyond what was done, hindsight is important, but hindsight with some element of foresight is very necessary for today's leader in the finance and tax world.
Great. That was a wonderful interaction that we had, and I'm sure a lot of people will benefit from what you spoke today. It was really eye-opening, and you covered so many topics and subjects. It was really interesting to listen to what you were saying. So
I'm glad you found it interesting. A lot of people find tax very boring.
No, you clarified all my questions and you explained it in a very simple manner. That is why maybe I understood what you were
that's
speaking.
Good. It's good to know. I hope your viewers will also be able to.
Found it interesting. Definitely our viewers will find it interesting and helpful to use in their own life, in their own businesses. So thank you, Dr. Anand, and it was nice having you here today.
Thank you for having me on your podcast.
Yeah. This is Maneesha Wali signing off for Expert Rant. Thank you very much. Have a nice day. Bye-bye.